Thank you for joining this event. My name is Jerry Frank, and I'm co-founder and CEO of STRATAFOLIO. We're a software solution that's designed to help commercial real estate owners in 4 different areas: financial management, asset management, lease management, and investor management. Co-founder and CEO of STRATAFOLIO. We're a software solution design. And with me today is Carrie Christino from Elm Street Accounting. And actually, I want to stop for just a second. I'm getting some feedback. This is a live event. This is what happens. And quickly today is Carrie Christino from Elm Street Accounting. I'm just a second here. I'm getting some significant feedback. All right, now I think we are good.
Good.
Double checking. All right, I think we're good.
Wonderful.
Okay, so with me today is Carrie Christino from Elm Street Accounting. And Carrie's entire 20-year career has revolved around managing financials for business owners, and many of them in real estate. So we are excited to have her with us today to talk about the common mistakes she sees with the firms she works with. So today's format will be a 20 minutes of discussion followed by 10 minutes of Q&A. So we're going to start off, Carrie, and welcome. Thank you so much for being here.
Awesome. Thank you so much for having me, Jerry. I'm very excited to be a part of this.
Yeah, excellent. Well, why don't we first start off with the simple question of in your practice, why did you start focusing on commercial real estate as your niche?
The main reason I started Elm Street Accounting was to offer the ability to access a knowledgeable bookkeeper. You know, some business owners, they really need some support and they don't really have a budget for it. And that's what I really wanted to do. I wanted to help small business owners. Yeah. And the best part of my job is while I was doing what I enjoy and what I've done all of my life, I'm helping people who are very busy, many times overwhelmed. I get to provide some relief. It's been really rewarding.
And your last client or employment before starting your own business was all about helping commercial real estate owners, right?
That's right. I think a big part of why I chose real estate is because that's what I've done for the last 7 years. And when I left to, go on my own venture, it was very hard to leave. I loved what I did. I loved who I worked for. I worked as a financial controller for a company with 2 partners, and every day I was learning, new things from them and tackling new challenges. And I was surrounded by the best team.
Yep.
This is kind of my way of honoring that great chapter, as well as combining it with my desire to help business owners.
Yeah, I think that's great. And now what we really wanted to focus on today is the most significant mistakes that you have seen as a bookkeeper, accountant, helping these people who own commercial real estate, and the kinds of things that you encounter when you do see their books. And if we could just talk through what are those top mistakes, and then we'll start digging into each one of them.
That sounds good. I'd love to. I think it's really important. A lot of people come to me and, they really tried. This is something that's very difficult, navigating a new system all while trying to set up and manage their own business. It's not surprising that they run into trouble. Right. That's where, we love to give guidance. We love to give help. And so I put together some of the most common things, for that reason. I really hope this helps people. Yeah. First thing, and probably my top thing, is, the bank reconciliations, they're wrong or they're not being done. This is the foundation. It's what, makes all of the data meaningful. So if they're not correct, right, you're definitely going to run into trouble.
Yeah. So the next, let's go through like the top ones you see, and then we'll just go into each one of them on really what what is the issue and how do you solve it?
Okay, that sounds great. Another, top mistake or issue I see is that, they're not paying attention to the bookkeeping. It's definitely hard to choose when you have a lot on your plate. And it's probably the thing that gets tackled last. You're trying to make an acquisition or sell a property or, list spaces for sale, or for rent. These are things that are obviously, as a real estate owner, you're going to prioritize. So by the time that they get to the bookkeeping, there are a lot of challenges in going backwards and catching up.
Right. Yeah.
And another mistake, I would say, is not properly categorizing transactions in QuickBooks. This is going to mean that none of the reporting is going to give you valuable information. So that's something that is, I wouldn't say as much as my first two, but I definitely see a lot of that.
Right, right.
The next thing that I would suggest, particularly for real estate owners, they're using some of the, features that allow you to manage the books that are built into QuickBooks, these tools that are there, and it's wonderful. However, sometimes the detail is being missed. So not recording the details of a closing statement or any of those transactions, that's definitely something that I encounter. And I go back and pull these closing statements and I record the details.
Right, right. We encounter that as well.
Do you? And a couple of others, just really helpful when it comes to putting together books that are going to give you meaningful information, more of, a great tool to get into and learn so that the books work for you and you can make great business decisions, would be learning to use the classes instead of sub-accounts.
Right, right. Okay. Well, I think, why don't we do this? Why don't we go into that very first one, bank reconciliations? They're done wrong or they're not done at all. Tell us what is the real problem there?
Well, like I said, the foundation of all the data and reporting are dependent on an accurate banking reconciliation, and it's not just the banks. It's any credit cards that you have, loans, merchant accounts. All of these should be reconciled on an ongoing, regular basis. Monthly is great. You have to be right or everything else is wrong. If there are things that business owners think they're doing, and however, there are other things you need to look for aside from when QuickBooks just gives you the, 0, you're finished at the end. You really have to dig in a little bit more to make sure you're not duplicating entries and that you don't have additional problems going on. So
definitely go through the bank reconciliation, the credit card statements every single month, balance out to 0.
Definitely. That's the first thing that it's important, to make sure that you do. Nothing is missed. All the transactions on all the statements are accounted for in the books for those statements. But there are a few other things that you should look at as well.
All right. So the next one you mentioned was that probably kind of brings us back to that not paying attention to the bookkeeping. So that's probably a good segue. Talk more in depth about what do you mean by not paying attention to the bookkeeping?
Well, it's very common for a new business owner to, not have the budget, or, not to have access to someone that they trust to handle their books, or they just want to be in charge of it. So it's very common for me to see business owners that are not paying attention to the accounting and bookkeeping. They run out of time. It's definitely all about time. And, you know, QuickBooks is great. It has a lot of tools built in to help guide a new user,
Yes.
but it can also be a little bit overwhelming and daunting, you know, if you're trying to do it all yourself and this is your first time. So,
Yeah.
you know, I know they have great intentions, you know, it's definitely, you know, when people come to me, they are talking about, I really, you know, tried to keep up with it, but it's always a time constraint. And then by that time, you're trying to go backwards,
right,
and start at the beginning to make sure everything's accurate.
Right. And I think one of the things that is important with paying attention to the bookkeeping is making sure you notice an incorrectly charged thing that's coming in, or something that's overcharged, but you know, waiting 3 months to take care of it makes it a much harder thing to resolve.
That's very true. That's very true. A lot of things are set to automatically pay, or, you know, a lot of other businesses, for example, tenants are scheduling things to automatically pay.
Right.
So when left to automation, you know, some problem occurs, and if you don't notice it until a few months down the road, then it's a real missed opportunity and much harder to correct. Right.
Yeah. The next one you had mentioned was not properly categorizing transactions in QuickBooks.
Mm-hmm.
I want to talk about one.
If the QuickBooks account is linked to the accounting system, if the QuickBooks account is linked to the bank, then all of the transactions that occur daily are going to download on a regular basis. You know, it's set to automatically download. And from there, you need to learn if you want to match or if you want to add from the banking transactions, because when they come in, they are not recorded to the books. And that is how most business owners handle recording data to the books, adding it straight from the banking transactions. It is possible that you will not be coding things accurately. Most commonly, you know, things that belong on the balance sheet or split, you're coding the actual transaction to where you think it goes best.
Right.
And so a lot of the most common mistakes I see are in loan payments. They come in and they get added, and they're added to the income statement as an expense instead of being split between a liability payment and interest. I see the same thing with sales tax. You know, if you're not using the sales tax module and you're recording the payment just when it comes in from the bank, and you're recording it to your income statement, that's another mistake I see. And I see often duplication in sales tax payments. Another one that I see for categorization is not separating the CAM from the operating expenses. Right. Which could have a very big impact when you're going to do your CAM reconciliations at the end of the year.
Right. Yes. Yes.
And then, you know, a few other, you know, not as, you know, significant for real estate owners, you know, the reimbursable expenses not being identified, you know, that means a missed opportunity in collecting them from the necessary party.
Right.
Or payroll. Payroll's a big one. You know, the transactions come in from the bank and they just get put on the income statement instead of going to the actual payroll journal and putting all of those in the appropriate categories.
Right. So do you recommend memorizing transactions or not?
I do not recommend memorizing transactions. You know, once you do that, unless you're certain there aren't going to be any changes, those are automatically added and you don't get an opportunity to take a look at the coding and the detail. So, you know, here we look at every single transaction that comes into the bank. We don't use them. And, you know, automation, like I said, is a great thing when it comes to saving time, but it needs to be used wisely.
Right.
if you have memorized transactions and they're getting added to your register, and you don't know that it's been in there added and it comes through the bank, you can also risk adding a duplicate. So going back to the bank reconciliations, these are things to be looking for.
Right.
What is uncleared in your bank?
Right.
Those are very, very important. And that is very, very common.
Right. Okay. What about, you had mentioned sub-accounts instead of classes.
This is a useful inclusion in some of the larger QuickBooks online programs. So if you have QuickBooks Plus or QuickBooks Advanced, you can enable classes. You know, it's very difficult as a new user of QuickBooks to think about getting into this. And the inclination is to create sub-accounts, you know, in the fixed assets and, you know, the capitalization. You know, I see a lot on the balance sheet, you know, and for a while before I learned about classes, that was my inclination too. So I would really encourage any real estate owner to learn classes. You know, there are a lot of useful free tutorials that you can find by seasoned professionals, seasoned bookkeepers that walk you through how to use those classes. And, you know, of course, you know, you can reach out to a bookkeeper. You know, there are a lot of bookkeepers out there now virtually, and we do this because we like to help people. And whether it's just a diagnostic, you know, to help you, or to give you some training, you know, classes would be a really great thing to learn.
Can you talk about a situation where you would use classes?
Sure. You know, especially as a real estate owner, you might have more than one property, and your inclination may be to set those up on the balance sheet using sub-accounts.
Yeah.
And by using classes, you can assign a class to each property. And that means there is a reporting feature that's going to give you really valuable data, because you can isolate all of those different properties and see the actual activity for each property.
Yeah. You know, as I'm thinking through all the things that you've talked about as common errors, what ends up really happening is if you do have these, and it's usually not just one of these things that happens, right? It's really a combination of this, but all of this then impacts doing taxes at the end of the year, right?
That's very true. That's very, very true.
So it's really a compounding effect. And maybe talk through, like, what is that compounding effect? So if somebody comes in and they haven't done their bank recs correctly, or maybe they have reconciliation errors and they haven't really paid attention to where things are getting classed. So what happens for that person who is doing a end of the year catch up and cleanup? What really happens?
Well, the biggest impact is that, you know, normally it's a delay in timely filing, and that could impact, you know, interest and penalties. And the other side of it is when you're presenting your information to your CPA, they are not able to determine, you know, the best deductions for you, or, you know, get the best possible outcome. You know, by putting everything in the right place and making sure everything is reconciled, the CPA has a real advantage of getting you, you know, the minimization of taxes and maximization of deductions. You know, that is very important if they have to dig through and try and find it. And most often they're just not going to be able to capture that information. You know, that could be significant, because later down the road, you may want to, you know, catch everything up, and you may find real opportunities. And then you have to go back and amend your tax return. You have to, you know, notify your investors, and they get new tax documents. You know, it's a very domino effect.
Right. Yeah. And you think about the fact of, you know, going to CPA to do your taxes at a time where their time is at a premium. So that cleanup that they may have to go through, because an accountant is not going to just say this is fine if it's that bad. They're going to say, and can you how expensive is cleanup then at that point?
It's not funny, but the funny thing is that, people are trying to avoid ongoing bookkeeping to save money.
Right.
But then most often they get into a position where they're like, I have to go back. I have to get this done. It costs the same, if not more, to go backwards and catch you up, depending on if it's at a premium time. A lot of people are looking for that service right before, tax deadlines. It just definitely is a benefit to start off on the right foot right from the beginning.
Right. Yeah. And so hiring a bookkeeper to do the thing that is, and for a lot of owners, it's not their core capability. No. Their core capability is finding a good real estate asset to invest in, bringing those outside investors to find it, to invest and grow and build their portfolio. And it's okay. Everybody doesn't have to be great at everything, but the right people in place, just like they would find a good broker or they would find good investors to work with them, they need to have the other people surrounding them on the financial side to do that bookkeeping. So at the end of the year, when it is time to do taxes, they're able to do that quickly.
I agree. That's a really big belief of mine. I saw in my past how great it works when you have a bookkeeper, well-versed in taking care of the ongoing bookkeeping, as well as a really trusted CPA, well-versed in real estate. Very important, working in tandem with the owner throughout the year is going to provide you the support, the benefits that you need to be successful and to have time for yourself and to do the things that you love to do, which is go out there and invest and find those properties. And
right. And I would be entirely remiss if I didn't mention at this point that STRATAFOLIO is a solution for lots of real estate to give the bookkeeper, the accountant, their property manager, their investors, all access to one single repository of performance, leases. We do CAM reconciliation. I know that it's a large task at the end of the year, beginning of the year, at the same time that they're getting ready for taxes. And there's a lot of things that we can do to make that part of running a business much easier.
That's why I'm here. I found you and I said, this is a great tool for real estate owners. QuickBooks is great for accounting. It has a lot of features, but there are so many valuable things that I noticed in STRATAFOLIO as a bookkeeper that has worked in real estate for many years. Yeah. I love the fact that it can keep track of your escalations. I love the fact that it keeps track of your loan information. It's true. There's a lot of support built in there. And I am so happy that I include that, for the solutions that I offer my real estate clients.
Yeah, we're glad to have you. Yeah, we're one of the first things that we actually developed for our clients was being able to do CAM reconciliation in 3 clicks, because we know at the end of the year, beginning of the year, there is not a lot of extra time. So being able to rapidly produce those and get them out to tenants is a good thing.
Yeah.
All right. Any other last thoughts, Carrie, before we call it a day?
I think we've covered a lot of ground today. And like I said, giving this information out there to business owners to help them be more successful. I would say that, my closing words would be, don't go it alone. Ask for help, reach out for some support, whether it's just getting a little bit of training. A lot of bookkeepers will do a training session and record it so you can refer back to it. or, better yet, outsource, and get that support that you need.
All right, well, that was some good closing words, and I'm going to actually share our screen here. So your contact information is on the screen. My contact information is on the screen, and actually, yes, Carrie is one of our partners that we work with, and we enjoy working with Carrie. And thank you so much, Carrie, for sharing your help today, your wisdom on the things that you have encountered, and we're glad to have you. And thank you so much, everyone, for joining the session. And we will talk with you all next month. Take care.
Take care.
Bye.
Bye.